Good morning, everybody, and this is your Dow Jones day trade setup for today. So nothing much really went on yesterday. We were kind of all over the place. It did look at one stage like the S&P was going to, carry on, but that failed. We do have a bit of a test of this breakout here, which is 32,696, but then we're still on this weekly trend line, and that is the major last hurdle as far, well, second last hurdle. The absolute last hurdle is going to be a break above here at 34,300. So this is kind of setting up for something really interesting. This could be an exhaustion set of bars up to this zone. We are grouped the upside on the oscillators. We are now waiting for data. So we've got the Feds coming out tomorrow, and then we have non-farm payrolls on Friday. So we still have a whole lot of earnings coming out, but nothing that really impacts the Dow at the moment. So 3 hour, you can see we are pretty much sideways, just sandwiched between this level of support at 32,696 and then the trend line. I don't like the way the oscillators are on the 3 hour either. So that is something we really need to pay attention to. If you look at the hour, we did get a separation, did look like we're going to get some traction, and then just went sideways. So I suspect we're going to continue going sideways until Wednesday. We are waiting for the Feds to see what kind of interest rate hike we're going to get. Market is expecting 0.75, so anything less than that, or any sort of signs of easing off or tapering in the speech, then you should expect a pretty solid rally. Anything along the lines of exactly the same, so what's expected or more, so 0.75 or higher, and then some comments in the speech about there's no recovery and we are going to keep this going for another year, then you should expect a big plunge. So that's kind of what we are doing. So we're just treading water. So my advice is fairly simple. When we're doing this kind of chaotic move, stay away from it. Don't even bother trying to get involved in it. You're going to need a big catalyst to get above this trend line, and that catalyst is the Fed's announcement, and they need to be really dovish for this to continue up. And you can see, I mean, we had a nice juicy gap target to the upside, and we failed to even try and get there yesterday. So lots of concern for me at the moment. So we are sitting on hands, not really interested on this until the Feds are finished with their song and dance. Unless there's some big catalyst today or some news that leaks on what the Feds are doing, then you may see a move. But I think for me, probably more of the same today. And this trend line is a weekly trend line. It's a yearly downward trend, so it's going to take a lot to get through it. Anyway, that's kind of my view at the moment. Sit quietly and wait, and we'll catch up with you tomorrow morning. Cheers for now.